Not long to go now. Stan Shamu joins us from IG in Melbourne. Stan, good to see you there. Yeah, in terms of the ASX 200, what's your thinking there? We've already had some earnings reports through.
Yeah, morning. It does seem like we will open today slightly lower to relatively flat, maybe just down about 3 points to 5,052. So there's nothing much in it. Of course, we did see a massive risk trade on Friday where most investors were looking to get out of some of those yield plays and into the miners, in particular Rio, BHP and Fortescue, with Rio trading back up above $60. But of course this week it's all about earnings. There's quite a number of earnings being released just today. Of course we've had UGL. They came out this morning and it seems like they're slightly at the lower end of guidance, and I think a lot of analysts out there were expecting earnings of in the range 90 to 100 million. So they came slightly sort of towards the lower end of that guidance at about 92.1. So that should probably bring its stock under pressure. Of course, they also did give full year 2014 guidance within the range 120 to 130. So the market's looking at about 127. So that should be interesting as well to see how the market reacts to this, along with the fact that their demerger is on track for completion in FY15. So that might see the stock come under a little bit of pressure with earnings slightly skewed to the lower end of guidance. And potentially we could see it test that $7 level in the short term, but of course it'll be all about exactly how they're looking to improve in a very tough market for construction and mining services as well. So I think that will be probably one of the main focus of the market today. We've also had, of course, JB Hi-Fi coming out. It sounds like they're slightly at the higher end of guidance, just above that 116 million on the profit front, and that's where a lot of analysts were expecting them to come if they were at the higher end of guidance. Of course, it does look like those recent cuts by the Reserve Bank are starting to filter through to the consumers and are definitely encouraging a lot of consumers out there to start spending again. So that should be a slight positive for JB Hi-Fi today, that they might see their stock outperform today. Of course, we also have James Hardie later on, and they should probably be supported by the fact that the US economy has been doing very well, along with a weaker Aussie dollar. So that should be a fairly good result, or rather the market's looking for a fairly good result from James Hardie. We also have, of course, later on in the week, Commonwealth Bank. That will probably be one of the highlights of the week. There's a lot of analysts out there expecting a surprise dividend, a surprise on the dividend front rather, and that should be quite supportive of the rest of the banks should that come to fruition. I think, yeah.
Yeah, sorry, please go on, Stan.
Yeah, I think definitely the earnings will shape up the week, and of course the Australian market's been coming off a relatively low base on earnings, so hopefully we get a few surprises to the upside and they'll be able to drive this market higher this week.
Yeah, absolutely. And just adding to that JB Hi-Fi, the result you were just talking through there, the CEO saying that they've made a good start to FY14. They're expecting FY14 sales to rise by between 6 and 8%. So as you said, yes, one to watch definitely at the open. Just turning to markets around the region, because the Nikkei, yeah, might have gained 0.1% on Friday, but it was down nearly 6% last week. Worst weekly performance in 9 weeks. We do have some data, GDP numbers out today. What are you expecting from the Nikkei today?
Yeah, at the moment we are calling the Nikkei a bit lower, but of course they're the only market in the region expecting any big sort of economic data today. They've got first quarter GDP due out, and it's expected to be up 0.9%. That should be quite supportive of the yen today, and of course that's quite negative for the dollar yen. So ultimately this leads to a bit of a poor performance for the Nikkei really, and that's why probably we're calling it down 0.4% to the open. Now, of course, it's definitely been a situation where all the positive data out of Japan hasn't really worked out the way they wanted to, because, of course, it does imply that probably they don't need any further stimulus, and at the same time it's positive for the yen, which is ultimately negative for Japanese equities. So it continues to be a double-edged sword for Japan, and, of course, Abenomics hasn't quite turned out to work as well as they would have wanted it to in the short term. But we're pretty sure that Japanese officials will be looking at different measures to try and shore up the economy, and of course try and keep the yen weak. And that probably means that they will keep a strong emphasis on the bond market, and of course try to make sure that offshore investment is lifted in order to weaken the yen. So of course those weekly fund flows on Thursday once again will be in focus, and they might give a bit more direction as to how Japanese investors are feeling at the moment. We do have machine orders as well later on, along with industrial production, which is a revised number really for Japan today, and that should set the tone for Asia. And of course, we have to look at the US dollar as we approach September. Of course, it's all about shaping up expectations for tapering. We don't have too much out of the US this week, but of course, any data out of the US carries some weight in this environment, particularly for the US dollar. We've got some consumer confidence numbers due out, CPI and retail sales, and they should really shape up the sentiment around how consumers are feeling in the US, and of course around the confidence in the marketplace, given the recent measures that the Fed's already taken.
In terms of the Fed, yeah, just in terms of the data, we've got retail sales and also CPI due out this week. What are you expecting?
Yeah, we do expect to continue seeing a gradual improvement in the US economy on all fronts. And of course, given the recent numbers, particularly from a manufacturing and housing perspective, we have seen some strong improvements. And ultimately, if there's a lift in manufacturing, it probably means there's more confidence that consumers out there are willing to spend a bit more money and, of course, get involved in retail and other parts of the consumption market. So they should be quite positive. The US dollar has been really hammered over the past few weeks, continues to be subdued in this current market environment. So we do expect to perhaps see the US dollar come off its very low base at the moment, and this could be triggered by some fairly strong readings on the consumer and retail front this week. So we are looking out for potential for a slight US dollar recovery, and this should be relatively negative for the risk space later in the week.
Okay, Stan, thank you so much.
Cheers, Brady.
Stan Shamu there from IG. All right, let's update you on some of those earnings as well. We're just getting some analysis there through from Stan. UGL is going to split its engineering and property arms as the company looks to boost its flagging share price. This coming as the company announced